Hey guys, welcome back to the channel. So yeah, you read the title right. We are going to be talking about low risk, high reward stocks or investment options. And this video is going to be perfect for first time investors who are just starting out or just about to start investing. And your biggest concern is that you don't want to lose money. It's a natural place to be. We've all got a loss aversion. In this video, I'm going to be talking you through 4 options that you can implement. So please make sure that you take these, do some further research to make sure that they tie in with your goals, what you want to achieve, the level of risk that you're willing and able to take, your risk tolerance. And if you're struggling with understanding what all of that means and you need a little bit of help, then consider taking me on as a coach. I can give you the guidance and all the information that you need. There'll be a link in the description down below on how you can actually book me. Speaking about coaching, I'm going to be announcing the winners, the 5 winners to the competition, celebrating hitting 11,000 subs in 2020. And these 5 people are going to gain access to me as a coach for 1 session to help towards their financial and investment goals. So that's coming through this video. So make sure you stick to the end of this video to get that. And also please follow, because there's a lot of context that is important in this conversation. So with that being said, let's go. Right, so to kick this off, I think it's really important to acknowledge a couple of things. First and foremost, the landscape in which we find ourselves. We are in a low interest rate environment. What I mean by that is it's very, very difficult for you to go to your bank or your building society now and open an account that is going to give you a high yielding savings account. When I first started in financial services 15 years ago, we could open deposit accounts with a bank or a building society and get a 5% return. Those days are long gone. So now you'll be lucky if you get an account that is going to pay you 1%. I mean, you're really, really struggling to find those kind of deals at this point in time. So that's the first thing we need to acknowledge. The second thing that's worthwhile acknowledging is that the idea of risk versus reward, or risk and reward, or reward, is very, very different. It's relative to different people, right? So your idea of low risk might be high risk to me, vice versa. The same could be said when it comes to rewards. I had a portfolio review that I did on Friday. So if you've not watched that video, go and watch that right there. My pension B investment returned 9.71%. Now, some people will say that's a really good return, but if I look at it in context to my Tesla portfolio, which has done 330% or 40%, then that performance is actually really, really poor. So this is all relative. And ultimately, with this video, what I want to try and do is just give you some options that you can have a look at. But I don't know how this is going to fit into your sphere in terms of how you view good returns, bad returns, high risk, low risk. Some of this stuff for you might be low risk, but in the scheme of things, I'm trying to find things that from an investment theory point of view are considered to be low risk. So with that said, let's talk about the first option available to you right now. Yes, the good old premium bonds. And I've not spoken about premium bonds on this channel just yet, but premium bonds, whilst they're not sexy, because you're not buying them on Hargreaves Lansdowne and you're not getting it in an ETF, they are still a viable option for you to use if you're a first-time investor. And premium bonds are all completely tax-free. So this is essentially how it works. So you need a minimum of £25 to open your account. You can invest up to £50,000. Now, the current rate on the premium bonds as of the time of the recording of this video, which is January 21, the interest rate is 1%. But the interest rate is used to basically fund prize draws. So what typically happens is with premium bonds, there are a number of draws every single month. I think the number is like 3 million draws every single month. And as a bondholder within NSNI, you have the ability to win anywhere between, I think it's between £25 and £1 million per draw. And if you get drawn and you win some money, then effectively it is completely tax-free. So whilst it's not giving you kind of like a 1% return, almost guaranteed, you're entered into a draw where you could potentially get way more than you actually invested in the first place because of how the draws actually work. But again, it's also important to remember that it is tax-free as well. So when we talk about investing, I always say this, think tax efficiency first. This is something that you can use alongside your ISAs to get started pay no tax on the returns or the prizes that you draw if you're lucky enough to win. Okay, so the second option that you have when it comes to low risk, high reward options are short-term bonds. Now, I did a video last year about bonds in general. You need to go and watch that video. That's the artwork for it right there. It will give you the understanding, the foundations that you need to understand how bonds essentially work. But the options that I've had a look at here are investment grade bonds. And investment grade bonds are essentially bonds, agreements with businesses. So companies like Apple who have really strong credit ratings. So in other words, it's very, very unlikely that these companies are going to go bust. So they're as safe as you could possibly get. Now, I've had a look at a couple of options on Vanguard for you. The first one is the VCSH, which is an investment grade bond ETF. Is performed at 5.13% this last year. That isn't to say it's going to perform that way moving forward, as past performance is no indication of future performance, but it does give you an idea of how it's performed in this 2020 period where we have seen a lot of volatility in the market because of COVID, and economies have taken a bit of a hammering. So this one is a short-term bond, 1 to 5 year term, but because it is an ETF, you could trade out of your position at any given time. It has got an expense ratio of 0.05. So again, as a first-time investor, keeping your costs down is very, very important. So that's the first option you can have a look at. You can find that on Vanguard. The second one is also available on Vanguard, and it is a Vanguard Total World Bond ETF. The designation for this is BNDW. It's a global investment grade bond. Again, it's an ETF. So this gives you global exposure. So you're going to have bonds from across all over the world. And this one has actually performed a 6.86% in 2020. It's slightly higher risk than the VCSH that we just spoke about, but the performance, because it's got that global exposure, gives you a bit more diversification from a bond point of view. The expense ratio is slightly more at 0.06%. It is an intermediate in terms of terms. So you're looking at 5 years plus, probably up to about 8 years, I would guess, within that. They don't specify within the key investors information document at all. But those are two options within your short-term bond options that are available on Vanguard right now that you could use as a first-time investor to get your feet wet, to actually start investing without taking too much risk. Now, that doesn't mean there is no risk involved. There is still a little bit, but it's going to be low risk. You're not going into that high risk pool. The third option that you have available for you is to have a look at maybe some dividend stocks. I did a video talking about Dividend Aristocrats. That's the artwork for it there. Again, go and watch that video because there are Dividend Aristocrats. There are 66 altogether, companies that have consistently paid dividends to their investors over the last 25 years and have increased their dividend payments every single year. Now, because there are so many companies, I could literally reel off so many of them. I've looked at two of the highest paying dividend stocks currently at the moment, and you can find these on Trading 212. So if you are looking to use Trading 212, you can access these companies. You can also access these companies via Stake, Free Trade, or any other apps that you're centrally using. So again, my link comes in handy if you want to pick up some free shares, if you're considering using Trading 212 or Stake for this purpose as well. And again, you'll get a free share as well. So two that I picked out for you, and again, there are plenty more of these companies, but the two that I picked out with the highest rate of dividends right now, the first one is BP. When I checked it, let me just go on my phone actually right now to show it to you live, because I looked at it last night doing research for this video, and the dividend yield at that point was 12.77% for BP. And for AT&T, which is the second company, the dividend yield is 7.07%. So let's just get into Trading 212 right now. We'll just have a look at this live so we can see where we are. They were in the dividend pool. So we've got AT&T here, and the dividend yield for AT&T is 7.07%, same as last night. And for BP, which is the second on the list right here, you're looking at a dividend yield of 12.77%. Now, the reason why you would go for larger companies like this is because they have been around for a while. They're going to have strong balance sheets. Again, if you watch that video, I explained that companies that pay dividends are typically profit-making companies. So if you're going to do research on dividend companies specifically, or the Dividend Aristocrats, please do some further research around what they've got on their balance sheet, their financials. Go and have a look at what their PE ratios are, their earnings per share, that kind of stuff. Again, if you need help with that stuff, you don't understand what all of that means, consider taking me on as a coach. I can explain and empower you so that you can have a look at this yourself and teach you how to do this on your own. But you need to make sure that you go and do a little bit of research. You just don't go and take AT&T and BP and go and put it into your portfolio. Please do your own research. But that's another set of things that you can invest in to give you low risk, but potentially high returns. All right, so the last option that I have for you is actually another Vanguard option, and it's one of the life strategy funds that they have available right now. You can go to Vanguard. This is what it essentially looks like. It is the 20% equity, 80% bond option. And what this basically does as a first-time investor is it gives you some access to obviously companies that you want to be invested in. So the big companies, Apple, Facebook, Microsoft, those kind of people. And it also gives you a little bit of protection using bonds as well. So it's kind of the best of both worlds. But because of the way it's built, it's designed to be really, really cautious, very, very low risk. The performance of this thing over the last 12 months is actually very, very impressive, considering we've had COVID, markets took a bit of a tumble, and it's only got 20% exposure on the equity side. It's done 7.5%. So that isn't to say it's going to do that in the future. Again, it's past performance is not an indication of what's going to happen in the future, but you do have a track record here. I think over the last 5 years or so, it's returned something in the region of about 30% in total. Like, that's pretty good performance for a fund that has only got 20% exposure to the equity market, and majority of it is actually listed in bonds. Very, very impressive indeed. So again, this is an option to go and have a look at, but definitely do some further research of your own to make sure that it actually fits your goals, your risk appetite, and what you want to achieve. So those are the 4 options that I've just presented to you about how you can invest low risk and get some potentially high rewards. But remember, again, this is relative. A 7.5% return might not be high to somebody. It might be very, very attractive to somebody else. And that brings us to the winners of the competition that I announced on Monday to celebrate hitting 11,000 subscribers in 2020. I wanted to make this one a little bit different because previously I'd given away money, I'd given away equipment, and I wanted to do something that would actually be of actual help to people and actually lend my expertise to empower and contribute to your journey. So the winners of this competition in no particular order are Jack Osborne, Greta Fitzpatrick, Kevin Bryant, Lolanda Davies, and Callum PL. Congratulations, you each left a really thoughtful comment talking about what you would like help with, and I can't wait to basically have a session with you guys and add some value and empower you on your journey. So please send me an email. My email address is in the description to this video, or message me on IG. I know a number of you follow me there, and I will provide links for you to book in a session at your convenience. But guys, I appreciate you so much. To everyone who entered, thank you so much. It's a shame I can only take 5. 5 is going to be a big stretch, but I wanted to be able to touch as many people as possible. I appreciate every single one of you for watching these videos and supporting and sharing and liking. The goal is to grow this channel to 60,000 subscribers this year. We're currently at 12,782 as I record this video. So guys, you are so valuable to this journey, and I hope to be able to continue to provide value to empower you on yours as well. So thank you so much. Please remember, money is a tool, life is for living. I'll catch you later on.